Hello everyone and welcome back to TradeSmart. In today's video we will retest our 3 best performing strategies tested on this channel so far. This video was chosen by you based on a poll I launched a few days ago. If you like this vote-based video content format, don't forget to let me know by pressing the like button and feel free to give me video ideas for the next poll. The 3 strategies we are going to retest are the simple and profitable forex scalping strategy with a 26% gain on the account, my unique 7 indicator strategy with 47% gain on the account, and the best performing strategy, the triple EMA stochastic RSI strategy with 29% gain on the account after 100 trades. If you haven't seen these strategies backtested 100 times, links down in the description where I give you more in-depth thoughts and results on each of these strategies. And now, let's see the third place winner, the simple and profitable forex scalping strategy. For this strategy, we are only going to use 5 different EMAs. So if you want to have the 5 EMAs within one indicator, you have to type in 5 EMAs. And if you click on this one, you can customize all of your EMAs within one indicator. So let's do that. After you got that set up on your chart, go into the settings and change the inputs to these EMAs. The first 3 EMA are going to be representing our 5-minute EMAs, the 21, the 13 and the 8. And the last 2 EMAs are going to represent the 1-hour time frame, 8 EMA and the 21 EMA. Now go into the style and change your color settings to these. And you are all set. So let's see the rules for a long entry. So for a long entry, the first thing which you need to see is that the longer time frame EMAs are lining up in these directions. So you have to have the yellow EMA under the red EMA. The second step is that you need to see the short-term EMAs lining up in this way. So you have to have the white EMA on the top, under that the green EMA, and under that the blue EMA. Once you have that, the next step is that you need to see a pullback away from the 3 EMAs without touching any of the 3 EMAs, which you can see happens right on this candle. The fourth step is that the price needs to come back to the EMAs and touch one of the 3 EMAs without closing under the 3 EMAs. So as you can see, we have our first touch right here. So this candle is going to be your trigger candle. Once you have your trigger candle, the next step is that you need to count back 5 candles. 1, 2, 3, 4 and 5. And you have to find the highest point of those 5 candles, which is going to be on this one. So let's mark that down. The next step is you have to pull up another tool, which is called the date and price range tool. And you have to measure 0.3. So as you can see, this is 0.1, 0.2 and 0.3. Once you got that, the top of the box is going to be your entry point. So after the trigger candle, the candle needs to close above the blue candle. Otherwise the whole setup is cancelled and you need to look for another entry. In this case, you can see the price never closes under the blue EMA. So we are going to enter on this candle right at the top of the box. For a stop loss placement, we are going to use again our date and price range tool, and we are going to find our trigger candle, which was this candle, and measure 0.3. Our stop loss is going to be at the low of the box, and our take profit is going to be 1 to 2. As you can see, this trade was a winner. However, when you do these backtestings, one thing I have to note is that candles like this, when the price touches both the entry point and the stop loss, are not reliable because the price could have moved up, touching the entry point, and then down back, touching our stop loss, and then closing above the entry point. So if you are facing one of these candles, either you just ignore that trade, or you go onto a lower time frame and check for yourself if the entry point or the stop loss was touched first. Now let's see a short position. For a short position, you need to do exactly the opposite. So you need to have the yellow line above the red line. Once you have that, you go on to your shorter time frame EMAs. Now you have to have all the short-term EMAs lining up in this way. So you have to have the blue on the top, under that the green, and under that the white. The next step is that you have to see the price pulling away from the EMAs, and then coming back to it, touching one of the 3 EMAs without closing above the blue one. So the first candle that touches one of the 3 EMAs is going to be this one. So that is going to be our trigger candle. Now you are going to count back 5 candles and find the lowest point of the 5 candles. So 1, 2, 3, 4 and 5. And you are looking for the lowest point, which is on this candle. So let's mark that down. The next step is that you have to measure 0.3 from this candle with the date and price range tool, which is going to be here. That is going to be our entry point, so let's see when the price hits that one. Keep in mind that you still can't have any of the candle closing above the blue line, otherwise the whole setup is cancelled and you have to look for another entry. So as you can see on this candle, we are going to hit our entry point. So let's enter a short position right here. Now your stop loss placement is going to be the same as with the long position, so take out again the date and price range tool and count up 0.3. For the take profit, we are going to target 1 to 2. And we have a trade setup. As you can see, this one was a winner. And now, let's see the 100 backtests. And the results are in. After 100 trades on the Euro-USD pair on the 5-minute time frame with a 1 to 2 risk-to-reward ratio, we had 27 winners and 73 losses, giving us a 0.739 profit factor and a negative 19% gain on the account. On the top you can see the original strategy backtest results, and on the bottom you can see the retested ones. Well, as you can see, these results were not even close to the original backtest. One important thing I have to mention here is that when I did the original backtest, the video that this strategy was based on were using 3 pips, not 0.3. That was a mistake on my side. So I tried using 3 pips take profits and 3 pips stop losses, and the results got much better. So I will be retesting this strategy later on this channel and see if we get better results. But with this retest, I was using the same 0.3 pip rule with which I got the original results earlier. These bad results does not mean that the strategy itself is bad and useless. Most of the times with these low time frame strategies, the main thing what can happen, which can result in these drastic drawdowns, is that the price on the higher time frame has entered into a choppy sideways area where there are a lot of support and resistance areas, so your stop loss can get hit much easier and you are not having those good trending movements. And now let's see the second place strategy, the 7 indicator strategy, retested 100 times. For this strategy, we are going to use 7 different indicators. As you already mentioned in the comments, I know this strategy can be a bit overwhelming. It uses a lot of indicators, but this strategy is one that I put together from scratch, and I like to use multiple entry indicators and a lot of filter indicators. So let's go over quickly these indicators. So the first one which you need is the SSL hybrid. Click on this one. The second one is the normal SSL, which is going to be this one. The third indicator is going to be an EMA. So click on this one. The fourth one is going to be my favorite take profit and stop loss indicator. It's called the NNFX ATR. Click on this one. The fifth one is going to be the Keltner channel. Click on this one. One of my favorite entry indicator is going to be the wave trend. Click on this one. And the last one is going to be a filter for the candles. It's called candle height in percentage. So click on this one. Now let's go over all of the settings. With the SSL hybrid, I did not change anything. Only the style. With the SSL channel, I did not change anything either. With the EMA, I set the length to 200. The source is going to be close. With the NNFX ATR, we are going to use 14 period, 1 take profit and 1 stop loss. The smoothing has to be RMA. I changed the style. I unticked the buy take profit and the sell take profit, and I am using step lines instead of normal lines. With the Keltner channel, these are my settings. With the wave trend, these are the settings I use. And with the average low high, aka the candle filter, is going to use a 50 period. Once you get all that set up, let's go over the entry rules. For a long entry, the first thing you need to see the second one is that you need to see an SSL channel cross up, which is this indicator. The next one is that you need to see the wave trend printing a green dot on the same candle on the SSL just crossed up. As you can see, that happens right on this candle. After that, you need to see the SSL hybrid being blue between the last candle and this entry candle, which is blue. After that, our first filter is going to be a Keltner channel, so the price can close outside the Keltner channel, and as you can see, the price closes inside it. And the last thing you have to do is check for the candle height. How I usually do it, I put up a line on the candle height indicator and I type in 0.6. And at any time, if the entry candle is bigger than this 0.6 line, we won't enter the trade. But in this case, you can see that the candle height is under the 0.6, so this is a valid long entry. Now let's see the stop loss placements and the take profits. For the stop loss, we are going to use our NNFX ATR indicator, which is currently using a 1 ATR distance. So we are going to set our stop loss right at that level. And we are going to target 1 to 2.5 risk to reward ratio. And as you can see, this trade was a winner. Now let me show you a short example. For a short entry, then you need to have an SSL channel cross down, which you can see right here. The third one is that you need to have a red dot printed on the wave trend indicator, which you can see on this candle. After that, you need to see the SSL hybrid being red or pinkish color between the last candle and the current candle. For the filters, you need to have the candle close inside the Keltner channel. And lastly, you can't have the candle being above the 0.6 line. As you can see, all of those conditions met on this candle, so this is going to be a valid short entry. Our stop loss placement is going to be at the NNFX ATR indicator, which is 1 ATR distance, and we are going to target 1 to 2.5 risk to reward ratios. And as you can see, we just hit our take profit right on this candle. And with that said, let's see the 100 backtest. And the results are in. As you can see, with this strategy, we did make a 1.5% gain on the account after 100 trades. The profit factor is a 1.02, so this strategy retested is just barely profitable. The reason I am making this video is to show you that 100 trades is not even close to enough to say that the strategy is consistently profitable. As I said earlier, the most likely scenario is that we have entered into a sideways price action period where the strategy did not perform as good as before. And now let's see the last strategy, which is our currently best performing strategy, the triple EMA stochastic RSI strategy. For this strategy, we are going to use 3 different EMAs. For this strategy, we are going to use 3 different indicators. The first one is going to be the 5 EMAs, so type in 5 EMAs and click on this one. After that, type in stochastic RSI and click on this one. And finally, type in NNFX ATR and click on this one. Now let's go over the settings. For the 5 EMAs, first, go into the style and turn off the last 2 EMAs. You can also see here my color settings, which is yellow, blue, and white. Now go into the inputs and type in 7, 13, and 400. The last 2 doesn't matter because we are not going to use that. Now go into the stochastic RSI. At the stochastic settings, you're going to use a 3K and a 3D line. For the RSI length, we are going to use 15 and the stochastic length 15 again. And the source is going to be high-low close /3. For the NNFX ATR, the take profit is going to be a 1.9, the stop loss is going to be a 3, the period is going to be 16, and the smoothing is going to be RMA. Once you got all that set up, let's look for a long entry. For a long entry, you need to have all the 3 EMAs lining up in this way. So you have to have the white line, which is the 400, at the bottom. After that, you need to have the blue, which is going to be the 13. And at the top, you need to have the yellow. The next step is that you need to look for a stochastic cross-up. As you can see, the stochastic cross-up happens right on this candle. So that is going to be our entry position. The stop loss is going to be at the NNFX indicator, which is a 3 ATR. And the take profit is going to be also at the NNFX ATR, just at the blue line, which is going to be a 1.9 ATR. Once you got that set up, you can see that this trade was a winner. Now let's see a short example. For a short position, you need to see exactly the opposite. So the EMAs should line up this way. You have to have the white on the top. After that, you have to have the blue. And at the bottom, you have to have the yellow one. Once you have that, you have to look for a stochastic cross down, which you can see happens right on this candle. So that is going to be our entry point. The stop loss is going to be at the NNFX ATR indicator at the red line. And the take profit is going to be also at the NNFX ATR indicator, but at the blue line. And as you can see, this one again a winner. And with that said, let's see the 100 backtests. And the results are in. After 100 trades on the Bitcoin USDT pair, on the 15-minute time frame, using our best performing strategy, we had a negative 0.57% gain on the account. That is basically a break-even result. Now you can clearly see, even with our best performing strategy, which we tested only 100 times, we did not have made any profits. Now let's compare the old equity curves with the new equity curves. Here you can see my 7 indicator strategy. The original backtests are on the top, which you can see produced a 47% gain on the account, risking 1%. And at the bottom, you can see the retested 7 indicator strategy, which produced a 1.5% gain on the account. If you take a look at the retested one, you can see that from the start, we had entered into a downtrend movement and bottomed out at around the 30th trade. From the 30th trade, we started moving up, pulling back a bit, and continuing the way up. So probably if we have continued this backtesting, the trend would have remained the same and the strategy would have closed with a slightly bigger profit. Now if we take a look at our best performing strategy, which we tested 100 times earlier, and the retested one, you can see that from the start we started going down, then basically just going up and down until the end, closing at around the break-even level. If you put together the first 100 backtest and the backtest which we just made, you would have still come out with a profit. And with a simple and profitable forex scalping strategy, we don't have the original equity curve, but we can take a look at the new retested one. Right from the beginning, we started going down, then entering into a sideways action, but after that we saw a huge drawdown until the end. As I said earlier, I will do a retest of this simple and profitable scalping strategy, because I made a mistake in the original backtesting video, using a 0.3 pip entry and 0.3 pip stop loss position instead of a 3 pip one. Now let's talk about some key takeaways here. The first one is that 100 backtests are not even close to say that a strategy is profitable on the long term. As you saw earlier, with the retest, we did not get at even close the same results as with the first 100 backtests. The second one is that a strategy can be profitable in the long term, even if the strategy performed bad after 100 trades. This is what I've been talking about earlier, is that if you put together the first 100 backtests and the current 100 backtests, all of the strategies would have made some profit. The third one is that I always notice that these strategies lack in filtering overextended entry points and choppy sideways actions. That is why I added for the second strategy the candle height in percentage indicator, because that is an indicator that can show you if the price is already overextended on the entry candle. The next one is to be careful with strategies that you saw backtested only 100 times in a video and never start them trading right away. You have probably seen other strategy backtesting videos 100 times and you saw amazing results. This usually happens because of the trades are cherry-picked to show you great results, or you get presented fake results, making you believe that the strategy is profitable and making you subscribe to that channel. The last one is that making a consistent and profitable strategy takes a lot of trial and error and testing what works and what doesn't. With this, I just wanted to tell you that it is not easy to find a good performing strategy for the long term, and it might take months or even years to create one for yourself. So what is the solution? First, get to know the indicators better and the way to use them for your advantage. As you might know, there are a lot of types of indicators and we use them for different reasons. There are the entry indicators, there are the trend filter indicators, there are the stop loss take profit indicators, and there are some filtering indicators. Using the perfect combination of these indicators can give you a consistently profitable strategy, but you have to find those indicators and the right settings and put those together into one trading system. For a good strategy, in my opinion, you need entry indicators, 10 direction filtering indicators, stop loss and take profit indicators, one trading stop loss indicator, and a few filtering indicators. Recently, I started exploring these filtering indicators, which can filter the losing trades, leaving you with much less losers than winners. And the last one, using trading scripts can make this process a lot easier. That's why we are giving you free strategy backtesting scripts. One more solution to these problems is that you need to update your strategy consistently, changing the indicator settings to make it perform right on the current market conditions. This is a time-consuming process and hard to do, so that's why we are started to learn into automating this process using computing power and different programs. Soon I will show you how this automating optimization software can work and how we can benefit from it. But until then, thank you all for watching. If you like these honest reviews of trading strategies and systems, don't forget to drop a like, subscribe, this helps out this channel a lot. And if you have any video ideas which you want to see presented in the next poll, drop that down in the comment section and stay tuned for the poll. And with that said, see you in the next video.